China may look at other avenues to hurt the U.S. in this trade war. I've said this before, but the tariffs on Chinese goods hurts them more than the tariffs on our goods. The simple math on it is the U.S. exported $143.5 billion of goods to China in 2024, while importing products worth $438.9 billion. Trade is way more important to their economy considering the fact that they are a net exporter and a large one at that. In 2024, China exported roughly $3.58 trillion worth of goods while importing just $2.59 trillion worth of goods for a surplus around $1 trillion. This makes trade a huge part of GDP as net exports contribute around 20% of their GDP. The US, on the other hand, is a net importer, so our trade deficit actually subtracts from our GDP. What else can China do to harm the US? Well, China did issue an alert warning its citizens of the potential risk of traveling to the US and attending schools here. Although there were approximately 1.6 million Chinese tourists that visited the US in 2024 and more than 250,000 students enrolled in schools, I don't see this advisory as too problematic, especially considering there was an estimated 77.7 million people from other countries that came here to the US in 2024. The big concern people have is China selling our debt to drive up borrowing costs. I was disappointed by an article that said China could crush our housing market by selling mortgage-backed securities. Seemed a little dramatic to me considering foreign countries only own 15% of the total outstanding mortgage-backed securities. And the top owners did not include China, Japan, Taiwan, and Canada. But I don't see those other players selling at this point in time to harm the US market. It appears China holds just around 2 to 3% of these mortgage-backed securities and has been selling them over time with holdings down 8.7% year over year in the month of September and down 20% by the start of December. Even looking more broadly at U.S. Treasury securities, China owned just $760.8 billion as of January 2025, which would represent about 2.2% of the total U.S. federal debt. Be careful falling for clickbait, as I don't believe China has the ability to crash our housing market. It would likely cause interest rates to increase slightly, but an outright crash would be extremely unlikely. Overall, while this trade war may hurt us, I still firmly believe it will have a far larger negative impact on the Chinese economy than our economy here in the US. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.